If you are over 50 and keep cash at home, pay close attention. The next time a law enforcement officer, a creditor, a tax agency, or even a family member asks where that money came from, your answer alone may not be enough. You may hear, "We need documentation for this." You may hear, "This amount looks suspicious." You may hear, "We cannot verify the source of these funds right now." And in that moment, it will not matter that the money is yours. It will not matter that you earned it, saved it, budgeted carefully over the years, and kept it nearby because you no longer trust a system that has disappointed you before. It will not matter that the cash came from Social Security benefits, a pension, an IRA, the sale of a vehicle, decades of setting small amounts aside, or an inheritance that has been in the family for generations. Because in 2026, the systems designed to combat financial crime have broad authority to question, flag, investigate, or take action involving cash that lacks a clear and documented paper trail. A large amount discovered during a traffic stop, money found during a home inspection connected to a legal dispute, cash noticed during an in-home care visit, or a sum questioned by family members during the settlement of an estate. Any one of these situations can draw you into a legal and financial process you never expected. And the most unsettling part is not what happens to guilty people. It is what can happen to completely innocent people who never imagined they would need to defend their own savings. You may be buying nothing illegal. You may have earned every dollar honestly. You may be keeping cash at home for entirely legitimate reasons. A family emergency, a private transaction, distrust of the banking system, concern about power outages or banking disruptions, gifts for grandchildren, or payments to contractors in a cash-based local economy. But if authorities decide that the amount appears unusual, or if the records proving where it came from have been lost over time, protecting that money can become extremely difficult. There is also a level of cash that many people are unaware of. Research involving civil asset forfeiture cases and IRS structuring investigations has shown that larger amounts of cash are more likely to attract scrutiny. Cash amounts exceeding $5,000 during a single interaction, whether in a traffic stop, a home visit, or a legal proceeding, have often received greater attention than smaller amounts. That does not mean $5,000 is a magic line where problems suddenly begin. It simply means that the level of scrutiny may increase once larger amounts are involved. And many Americans over 50 who maintain emergency cash reserves have accumulated far more than that over the years. They view those savings as a sign of responsibility, and many have no idea that the environment surrounding large amounts of cash has changed in ways that can transform a lifetime of careful saving into an unexpected legal challenge. This is not a rumor, and it is not fear for entertainment. It is a reality that Americans over 50 who keep significant amounts of cash at home should understand before an unexpected situation places them in the middle of it. Today, I am going to explain 4 legal rules, mechanisms, and cash-related traps that can turn personal savings into a legal headache and, more importantly, what you can do before that happens. Because people who learn about these issues only after they are already facing them often discover the hard way that preparation matters. The first concern involves civil asset forfeiture and the assumptions that can arise when large amounts of cash are discovered. If you are over 50 and keep more than a few $100s at home, this issue deserves your attention. Under civil asset forfeiture laws in the United States, law enforcement agencies have the authority to seize cash and other property they believe may be connected to criminal activity. Read that carefully. A criminal conviction is not always required. Criminal charges are not always necessary. In many jurisdictions, the legal standard for seizing property is lower than the standard required to prove that someone committed a crime. And this is where ordinary people, not drug dealers, not money launderers, but honest Americans who simply keep cash at home without detailed records, can find themselves in trouble. Large amounts of cash discovered in a home, a vehicle, or on a person during an encounter with law enforcement can trigger questions and, in some cases, seizures. Once significant amounts are involved, suspicion may increase, and at least part of the burden can shift to the owner to demonstrate that the money was obtained legally. If the records no longer exist, if documents have been lost, or if the money originated from transactions completed decades earlier when few people kept detailed receipts, proving the source of those funds can become extremely difficult. Consider the case of Jerry Johnson, a 67-year-old retired nurse from Miramar, Florida. Over many years, he saved $40,000 through extra shifts, freelance medical consulting, and disciplined spending. Having lived through a bank failure earlier in life, he preferred keeping his savings in a fireproof safe at home. While transporting $8,600 to purchase a used camper from a private seller, he was stopped for a broken taillight. According to the account, the cash was seized and held pending an investigation. Mr. Johnson was never charged with a crime. He was never arrested. Yet the investigation lasted nearly a year, and the legal expenses required to recover his money exceeded $4,000. Eventually, he recovered the cash, but the uncertainty, expense, and humiliation of having his life savings treated with suspicion left a lasting impact on him. He later said, "I never did anything wrong in my life. I saved that money dollar by dollar for 30 years, and I had to hire a lawyer to prove it was mine." The lesson is simple. If you keep several $1,000s or more in cash at home, maintaining records of where that money came from can be extremely important. Bank withdrawal statements, notes documenting the sale of property with dates and names, records of inheritances, and written accounts of side jobs or additional work may all help establish a paper trail. The records do not have to be complicated, but they do need to exist because memories are not evidence. And when questions arise, evidence is what protects you. The second issue involves IRS cash reporting rules and the challenges that can arise for people who keep large amounts of cash at home. Many Americans over 50 stumble into this area without ever intending to do anything wrong. Most people are aware of one part of the system. Banks are required to file a currency transaction report whenever a cash deposit or withdrawal exceeds $10,000. That report is not an accusation, and it does not automatically mean that you are in trouble. That report is not an accusation, and it does not automatically mean that you are in trouble. In most cases, the bank is simply complying with federal law, and the matter ends there. But this is where many people unknowingly create problems for themselves. If you intentionally withdraw cash in amounts designed to stay below the $10,000 reporting threshold, because you value privacy, because you believe smaller amounts attract less attention, or because someone told you it was smarter to stay under that number, that pattern of behavior has a name. It is called structuring, and under the Bank Secrecy Act, Title 31, Section 5324, it is a federal offense, regardless of whether the money itself is legal, regardless of whether you are hiding anything, and regardless of whether you intended to violate the law. The government does not have to prove that the cash was connected to criminal activity. It only has to show that transactions were arranged in a way intended to avoid the reporting requirement. The intent to avoid the report is what matters. Courts have held that multiple withdrawals just below the $10,000 threshold, carried out over a period of time, can establish a pattern suggesting such intent, even in the absence of any other evidence of wrongdoing. Now consider how easily this can affect someone who has spent years building a home cash reserve. They withdraw $8,000 one month, $7,500 the next, and $9,000 after that. They believe they are being cautious. They believe staying below $10,000 is the responsible thing to do. Without realizing it, they may have created a pattern that raises questions, even though they never knew what structuring was. Consider the example of a retiree in Ohio who withdrew amounts ranging from $7,000 to $9,000 over an 18-month period to build an emergency reserve. She distrusted the banking system after seeing relatives lose money during the financial crisis of 2008. Each withdrawal was below $10,000. She had never heard of structuring. Following a routine review, her account was flagged and the matter was referred to the IRS. She spent 8 months dealing with investigators before the case was ultimately resolved in her favor. No charges were filed. She recovered all of her money. But the stress, the legal consultations, and the disruption to her retirement were costs that nobody compensated. The protection is surprisingly simple. If you need a large amount of cash, withdraw it honestly and in the amount you actually need. Allow the bank to file whatever reports federal law requires. That is normal. That is legal. And it is far safer than creating a pattern that appears designed to avoid reporting requirements. The report itself is not the problem. The pattern can be. The third concern involves the discovery of cash during ordinary legal processes. This issue affects many older Americans because it does not require a traffic stop or a federal investigation. It often arises during everyday life events. An estate settlement after the death of a loved one, a divorce proceeding, the sale of a home, a dispute with a contractor or neighbor, a bankruptcy filing, a Medicaid eligibility review, a contested will. In each of these situations, large amounts of undocumented cash can create significant complications, not necessarily because anyone suspects wrongdoing, but because the legal system requires assets to be accounted for, and cash that cannot be traced often becomes difficult to explain. Medicaid eligibility is one area where this issue frequently arises. Medicaid uses a 5-year look-back period when evaluating long-term care eligibility. The purpose is to determine whether assets were transferred or given away in order to qualify for benefits. Cash held at home is still considered an asset and must be disclosed. And if that cash cannot be connected to documented withdrawals or other records, questions can arise. Applications may be delayed, eligibility may be postponed, and explanations that take months to assemble may become necessary at exactly the time when care cannot wait. Consider the case of Beverly Cartwright, a 73-year-old widow from Tennessee. Over roughly a decade, she accumulated approximately $22,000 in cash from gradual withdrawals of pension and Social Security income. When she applied for Medicaid assistance for her husband, who required skilled nursing care, the undocumented cash created gaps in the financial record. The caseworker requested proof of the source of the funds. Most of the records had been lost or were incomplete because Beverly had never imagined she would need them. As a result, the application process was delayed for nearly 5 months, while she and her children attempted to reconstruct a paper trail from years-old bank statements. During that period, the family paid for her husband's care out of pocket, at a cost that exceeded what the documentation dispute itself was worth. The lesson was painful. Had Beverly maintained a simple record of her withdrawals, the matter might have been resolved in days rather than months. The answer is not necessarily to stop keeping cash at home. The answer is to document it. Keep a simple written record of significant withdrawals. Record the date, the amount, the account involved, and the purpose, even if the purpose is simply personal savings reserve or emergency fund. Store the record in a secure place and update it periodically. It takes only a few minutes and may spare you months of frustration during one of the most difficult periods of your life. The fourth issue involves theft, disaster, and insurance coverage. This surprises many people who have carried homeowners insurance for decades and assume they are fully protected. Standard homeowners policies often place strict limits on coverage for cash. Many policies issued by major insurers provide only limited reimbursement for currency kept in the home. As a result, someone who keeps $5,000, $10,000, or $20,000 in cash may discover after a burglary, fire, or natural disaster that only a small portion of that loss is covered. The remainder may not be reimbursed under the standard terms of the policy. Most people with home cash reserves are unaware of this. They assume their policy protects everything inside the home. While many possessions are covered, cash and certain valuables are often subject to special limits, and unfortunately, people usually learn about those limitations only after a loss has already occurred. Consider the example of a retired couple in Arizona who kept $18,000 in a home safe as an emergency fund and as money that could be accessed quickly by their children if necessary. After a burglary in which the safe itself was stolen, they discovered that their homeowner's policy provided only limited coverage for the cash. Their insurance agent explained that additional coverage would have required a separate rider or endorsement. According to the couple, no one had mentioned that limitation during the years they had maintained the policy. The important thing is to understand your coverage before anything happens. Ask your insurance agent 2 simple questions. First, What is the limit for cash under your current homeowner's or renter's policy? Second, what options are available to increase that coverage? Those are questions best answered before a loss occurs, not after. Taken together, these are not isolated issues. They form a chain of risks that can affect anyone over 50 who keeps substantial amounts of cash at home without documentation or a plan. Civil asset forfeiture laws, structuring laws, legal proceedings involving asset reviews, and limitations in insurance coverage can all create unexpected problems for people who have done nothing wrong. These risks do not require bad intentions. They require only a lack of documentation, awareness, or preparation. Many people who trusted the simplest approach to financial security, saving money and keeping it close, never imagined that physical possession alone might not be enough. Cash can provide protection against many uncertainties, but by itself, it does not protect against these specific challenges. And those challenges have become increasingly important in recent years. So take a moment and consider your own circumstances. Do you keep several $1,000s or more at home? Do you have records showing where that money came from? Have you repeatedly made withdrawals below $10,000 because you believed that approach was safer? Do you know the cash limits in your insurance policy? Would that money need to be explained in the event of a Medicaid application, an estate settlement, or another legal proceeding? If any of those questions make you uncomfortable, do not ignore them. Discomfort can be a signal that something deserves attention, and attention is far easier now than after a problem has already arrived. A practical approach begins with documentation. Maintain a written record of significant withdrawals and receipts. Record the date, amount, source, and purpose. Update it whenever changes are made to the reserve. If you need substantial amounts of cash in the future, conduct transactions openly and allow banks to comply with reporting requirements. Understand the coverage provided by your insurance policy and discuss additional options if necessary. And if you are approaching a major life event involving asset reviews, consult qualified legal or financial professionals before the process begins. Preparation today is usually far less expensive than reconstruction later. Many people who keep cash at home are not doing anything wrong. They are acting out of experience, caution, and a desire for security. But the legal and financial environment surrounding large amounts of cash has changed over time. And those who are most likely to be caught off guard are often the people who simply never realized that the rules around them had changed.